Okay, guys, so we are doing trends today. We're going to start on Elliott wave a little bit and also the Dow theory to help us with momentum. Okay, so most technical analysts define trends in the same manner. Uptrends is going to need highs and then higher highs, but also in an uptrend, we're going to have a low and then there will be a low that's made higher. So in this case, we can then get our line that we will be able to draw here without 2 points. But also, the issue with trends is that this last high here would need to break before we can confirm that this is an actual uptrend. Now, this always causes an issue for us because then we'll be late in on the trade. Obviously, we're going to prefer taking the trades here at the bottom, but then that is without any confirmation. Like the first confirmation happens all the way up here when seemingly the whole move is already done. So that there is the issue of trends. Once it's confirmed, and then we are already too late. So with our strategy, when there's a confirmed trend, when you get your higher highs and your higher lows, then you get this 1 point there and another point, and then you can draw a trend line underneath that. So with our strategy, we want to confirm a trend and then a trend line that breaks down here. So in this fashion, we will be able to try and get in on the first time that the market decides to go short. Because if we're traveling all the way up here, we are already very late. So what we want is to come and break through this trend line and retest and then to go short. So how are we going to do that now? We're going to use Elliott wave for this. So the strength in Elliott is that we are going to confirm whether we are in a proper trend in the first place. Because if the trend line is broken and it's not a proper confirmed trend, then the chances of that trade not working out is higher. So you're going to get a better um, probability if a trend line that is broken was a confirmed trend. Good morning, Tyron. So the strength in Elliott wave is going to confirm the trend for us. And then also we're going to use the Dow theory and some of Elliott wave to help us identify when the trends might end so that we can get that trend line break and then our opportunity to trade. So Elliott confirms a trend like this. The starting point of wave one and then comes down in a corrective fashion and then another motive wave up and then correction and then motive again up. So he uses 5 legs or 5 waves. Now our strategy uses trend line breaks. That is why the first step is to confirm whether that was a proper trend that has broken in the first place. Now remember the homework that we've done. We just looked on the daily and looked for a trend line to break and then jump down to the 4 hourly, but we didn't confirm whether that was a proper trend or not. In this lesson, we're going to identify a proper trend or confirmed trend by Elliott. So we're going to have, Elliott says we have the motive wave and a motive phase and then also a corrective phase. So the motive phase has all these becomes too complicated. So we're going to simplify the whole thing. The impulsive wave and extended waves and leading diagonal and ending diagonal, that all really doesn't matter. All we want to do is find out where the highest probability is that the trend might fail. So first of all, confirming the trend, the wave here, when you look at the wave number 2, it shouldn't go below the first wave here. The starting point of wave 1, the wave 2 must never go below that. Otherwise, it's not a confirmed trend. Now, if you look at the wave, when we draw a trend line, it's going to be, we always need these two touches. Now, in this case, we can already see that the touches doesn't look good. And your first starting point, when you draw a trend line under here, and that you call that point 1 and that 2, you can see that this point here is somewhere down, much further down here. So the thing is, it already makes it difficult for you to have these two touches if the Elliott wave definition of a trend isn't adhered to. The other thing here is that your fourth wave should never go below point number 2 here. And then again, you can see it's really impossible to draw that trend line underneath this, because there isn't 2 points for you to actually connect to actually draw a trend line. So these two examples are nullified trends. So you can't be looking for the trend line to break if we, like, somewhere in this area over here, because we don't have our trend line anyway. That would be our first touch there, second touch there. So that doesn't show up anywhere here, because this is not a proper trend. So it's no use looking for a trend line break in this situation. That's what we were looking at. But the issue here is that this trend is not qualified. It doesn't mean that this trade won't work out. It just means that it's better if we objectify a trend and look at it in the same fashion, throughout the board. Whenever we look at any sort of opportunities, we're looking at a proper trend. And then also we're putting this thing under a microscope here now with Elliott wave. Wave 3, this one here. So this one is wave 1, 2, the corrective wave, and then this is the third wave. So it's often the longest wave, and this is the nicest looking trend that we can find. And then we have when it's nullified is when the wave here, the third wave, is the shortest of the two other motive waves. So if this wave is shorter than wave 1 and it's shorter than the last wave here, then this is also nullified, even though you can draw a trend line underneath this here. If you look at it, you can start from there and you can have that as your first touch there, and then you can draw your trend line there. You have your touches, and then you have your trend, then your trend line can break through there. So for me, I like using a trend that's confirmed by Elliott wave. So even this minute thing caused that I wouldn't take this trade. Yeah. So I'm looking for this sort of a situation where we have our second wave being the longest, or the third wave here is shorter than the last wave here. However, it is not the shortest of the motive waves. So in this case, this one is the only one that is nullified. So I would be looking at a trend line break in this situation here. Do you have any questions on just that portion? just on the trend line issue. So our strategy, we're looking for our trend line to break, but it is of no use when the actual trend we're looking at is not a trend confirmed by Elliott. Because you will see there's many opportunities to find trends, but a lot of them are not going to look decent, and trying to find trends that look a certain way. And this way, we're going to be able to objectify how we want it to look. Yeah, so that is the way, because this, Andy, this portion here is the first wave, yeah, from 0 to 1. That's wave 1. And then you get your corrective wave. That's wave 2. Then you have your impulse wave 3, and then another corrective wave 4, and then a wave number 5. So we have 1, 2, 3, 4, and then our fifth wave. Now, always try to note that when we draw a trend line, we need two touches, which is that 1 and 2. So we're starting our trend line up here like this. And then we're looking for that break. But in this case, this particular trend is not a qualified trend. Therefore, I will not be looking for the trend line break there. Oh, sorry, I made a mistake on the first one. But this, yeah, it's the 0, 1, 2, 3, 4, and then 5. Right, so then we go on to the momentum part of the trend, because we are always looking for weakness in the trend so that we can find where the possibility of the trend now changing to a new direction, or it's changing just to start another range. But in any case, we are looking for some sort of weakness in the trend so that we can find that trend line break easier. So the first stop that we have is looking at the trend, confirming whether the trend is a proper trend, a real trend, identified by Elliott wave, and then we are looking for weakness in the trend using momentum and Dow theory. So the reason we're looking for weakness is so that we can, it's our first point of where we actually look for a break in the trend line. So we become alert now that the trend is weaker, and then we want to look for that trend line break as soon as we spot any weakness. So with momentum theory, if you see prices are moving up here in this case, it's moving up. We're not concerned about the waves now. All we were concerned about is prices are moving up and it pulls back. And in this case, it pulls back 20% of this leg. Yeah? And then it moves back. It moves another leg up. And then for the next part of the trend, we see that the pullback is now 50% of the wave. So which means the sellers now are getting stronger. So every time there's a pullback, it's pulling back deeper. And then here's another leg where the pullback gets even deeper. So the sellers in this up move are getting stronger, which means that when we get to this leg here, we could look for that trend line to break if there was a trend going up this way. So the first step is to confirm whether this was part of a proper trend. Then at the end of this, we can then measure the pullbacks and see whether they are getting deeper and deeper and deeper, so that we can then identify a possible trend line break. Is that part clear? So if we stack all of these on top of each other now, like this one, the trend has been going like, say for instance, we're starting a trend, it's going up, it comes down, it pulls 20%, it goes up again, and it pulls back more. It pulls back by 50%, and then it goes up and up and up, and this time it pulls back 70 odd percent of this. So the next time it pushes up there, we will have our confirmed trend sort of thing. So because it's been pulling back all the time, more and more and more, deeper and deeper, the sellers were able to push back deeper and deeper based on the previous legs. We can then look for that trend line break there. So it gives us a clue when to start looking for this trend line break. Because a trend line break forms the main part of this strategy. Because the trend line break is going to ensure that the following trend, or the trend that changes now, that we are one of the first guys in on that trade. Like I explained before at the beginning, when the trend has been confirmed already, like if we're going up and then we have a confirmed trend, only once that happens, and then our barrier is up here, then we don't have any room to take any profits. Because remember, we have this barrier over here, and this was the first opportunity that we would have liked to trade. And that's exactly what we're still doing now. We're looking for our first opportunity there. We get a stop on there based on our usual entry methods, the beginner strategy, the envelope, and then after that we have our trend line that breaks, and then boom, we get our second opportunity over there. Now the jumping on the trend, that comes later on. At first we need to identify that we have some sort of a trend that is broken. Okay, so do we trade counter trending, or do we trade with the trend? This is going to be a daily chart now. Normally our daily chart is going to be our chart that we would like to trade alongside. So we're trading with the trend. Now this small bit here, the next bit, the part that's going up in yellow candles, if you get this smooth, beautiful look of yellow candles here, then it's possible that you can find a decent looking trend on the lower time frame. Like if you look at this here, another one, smooth, decent pullback toward the trend line, and then again here, smooth, decent pullback toward the trend line. So I'm going to look at this part of it. So on this daily chart, we've identified that the EMAs are sloping downward, and prices are below the 633 EMA, and it's below the 200 EMA. And for various other reasons, we might have found a trend line breaking here, a trend that was going up. So for various reasons, we found that we want to trade down. We want to trade short. And also we have the crossover of this EMA over here on the daily. So we are confirmed short. So we look at any up move for a opportunity to actually get in on this trade going short. Now this is the same trend on the 4-hourly. Yeah, this is the same move on the 4-hourly. And this is where I want to show you how this trend line gets weaker and weaker. Because as we can see here, prices are moving up all the way up to this high. Yeah. So we have this low point over here, and prices pushes all the way up there. and then it comes down to that point over there. So if you measure the distance that the pullback is, it's about, in this case, it's about 38% there, pullback of the move up. And then here we have another push up, another leg going higher. And then the second leg has pushed up quite high, but then the pullback is now 50%. So the sellers in this case are getting weaker and weaker. Yeah, do you see what I mean? And then the third time that this happens is a massive push up, but the push back is now 78%. So the trend line here, you can then assume that this trend is becoming weaker and weaker. So we draw our trend line under here, and then we could look for an opportunity based on the trend line breaking, because we've spotted that the trend is now weaker, and then we can look for an opportunity in going short. So we are always trying to look for that trend to end so that we can get to the next one. So if we look at this one, the prices are coming all the way down, and it probably hits some sort of a target here. Yeah. So now here, you don't really want to trade your first opportunity short. The trend has been confirmed and everything, but you don't really want to trade it short because you have this barrier that you've identified here. Yeah. Irrespective of what happens at the end of this year, I've highlighted this as a dead cat bounce, which means the prices are making as if it's going to go, that it's changed its direction here, and then it just falls down like this. But you don't want to trade here because it's too close to your barrier. It's too close to your support level, the area you've identified where you want to take profits. What you want to do is watch for weakness in this trend, and then look for that break and then go long. Yeah, but I need to just show you guys this first. Yeah? The whole story, yeah, is that we have the barriers up here, and we have our barriers down here, and that prices has moved up, and it's finally hit your area that you have highlighted based on it being a level. Yeah. So this is a level that you've been watching all the time. So the first opportunity is looking for some sort of a manipulation in this area. That is your first ever chance of getting into a trade. You are trading against the trend in this case, but that is based on a very, very, very strong level, and you've identified this sort of thing already. Yeah. So this here is your first opportunity, your first chance, and you've identified this as a proper trend based on Elliott wave, and you found some weakness here as well. You've used momentum theory, and you found some sort of weakness in this area. Then you draw any 2 points. If this is a proper trend here, you need 5 waves. Yeah, we can't have this. You need at least, even if it happens up here, at least you're getting, and it's getting weaker and weaker. That's your first opportunity. Then you still use your beginner strategy here for your first entry. You're looking for your excursion beyond the mean. You're looking for your level, and you're going short. So this is the highest risk that you're going to have here, because this might continue all the way up. It might go, and you get stopped out. But then you need to look at your next highest level again up there if you get stopped out here. And then your second opportunity is when you see the trend line is breaking now, and then you get your pullback here. Now you're looking for an entry, and then that there is your second entry. Then this year is going to be based on your Haikanashi. This year is going to be based on a trend line on breaking on the daily and a 4 and an H4 pullback toward the 12 EMA or the 36 EMA or a 36 EMA together with a confluence of a trend line. Yeah, so we need to remember that we are looking on our normal charts here, and then we are looking at Haikanashi once we find weakness here in the trend, and we see a trend line breaking, a confirmed trend line breaking. Yes, Andy, I'm recording this one. Okay, this is very, very important. Yeah. So the first step that we actually doing here is trying to identify that market state that we all love to enjoy. It's this um, ranging sort of a state, but inside that state, it gets to the level by trending upward. And we're going to use Haikanashi and the H4 to try and identify that trend. So we will always be in this sort of a situation. We'll always be in this sort. We'll always want to get long here, and then we'll feel that we are confirmed long, and then that's a dead cat bounce. And this is our worst enemy as contrarian traders, because obviously we are always looking to get in first on a trend. Yeah, that's what we are always doing. So this is the most dangerous area for us. Whenever we're going to lose any money, it's going to be in this sort of situation with this dead cat bounce. So for me, when this happens, when it is a high probability support level, resistance level, and there's a solid breakthrough with a candlestick, like one candle bar breaking through, and for me, that is a sign really to give up on my idea on going long there. I would instead take this break, pull back, and go short. But bearing in mind that we traded from the top here, remember, as our first opportunity to get into the trade. And then we trend traded this thing down based on the Haikanashi. And then we've stopped here because we were looking to turn back, but it didn't turn. It was a dead cat bounce and we went further, which means we are still short based on our idea up here. Yeah, because we never know what's going to happen here. I know our beginner strategy assumes that this is a very strong level and it's not going to break. Let's go to a chart quickly. Do you have any questions on this one? Okay. Right, we're on this New Zealand dollar versus the United States dollar. So whatever it's doing on the weekly, we can see, okay, this thing is going down, right? We have it underneath all these EMAs, and there's a confirmed trend line. And we can see the amount of time it's been spending here. This is a weekly chart now, and it's been 1, 2, 3 weeks in a row. It wasn't really able to do much there. If I zoom in there, we can see closing there, it's closing there, and then here we are again in that same area. So it's a very strong resistance there in that area. Now, for me, if these EMAs had broken across here and it's moved further up and the EMA starts to break, then I would probably look at that sort of a situation and then to trade it long. But until that happens, I am still going to be looking at shorting opportunities instead. Yeah. So what do we need to do here? We need to try and find some weakness in an existing trend line. So I know I want to be short, and I know that this year is a strong trend line, and I need to identify whether this trend here is a decent trend. So what I do is on the daily, I'm looking for a trend line to break. Now here we can see that the trend has changed its angle. So I'll use this, and also it follows the 12 EMA here. And then if it gets up here, if there's a trend line break, I have about 100 pips to my next target, and the next target would be about 200 pips. So you need to decide whether that is the amount of pips you are after. So if you've done your homework on this one and you've looked at your top-down approach, you've decided that you're short, then you can draw in your levels, and then that could be a level. And you look to the left here and you see 65.95. So a round number there could be just at 66. So 66 is a very strong resistance area there. You look further left and you can see there is some sort of reaction off the level. We have some there. It's not the best, but we do have some reaction off that level. And then here we have closer to price. That's where prices are. So it could be around about here. And then you measure the distance between the two, and it's about 120 pips. Yeah. And if it decides to break up further, then that then could be your next target higher, because we don't know what's going to happen in that area, but we want to have a plan with when something happens there. Yeah. When something happens in that area, you want some sort of a plan. So we have our resistance and our potential support there, and then we have also a barrier there, which is now comes in the form of a 200 period moving average. So the trend is going up. So we're trying to identify weakness. So let's look at the lower time frame now. So we have trend moving going up, and then we can look here. See the first leg is very strong. So this is another form of momentum. Dow theories, you measure the trend itself, the line, the impulse move up, and the next impulse move up was actually shorter. It's pulling back at this level. So the if you get then so for that reason, when you get a push up and the preceding push up was longer than this one, then the next pullback here is not a good idea to follow that trend, because our impulse moves up is getting shorter and shorter. So this is the trend line analysis now. We're using momentum theory and Elliott wave that has confirmed that we're going to count that as 1, 2, 3. This is longer, so we're going to say that this is a proper trend. So if it does break here, we're going to use this as a trend line break to go short, which means that if you're already in an area of importance here, you could then look at this as your first entry up here. Now we need to find out whether there was some sort of an entry here. Yeah. Now, this does form one of the entries that I'm going to show you next week. So this would have been the only thing that's against this trade here, the short that happened here in this area, is that it wasn't in the perfect level. But let's say this was a good level, yeah, and we traded it short. Then our next time that we trade this would be at a trend line break and then a pullback, and then we would trade this short if there is enough distance from our entry to our first target based on our stop loss. That's our first target, that's our second target, and then down here could be our third opportunities. Does that make any sense? Yeah, let me just show you again. The zones is going to be the most important thing ever. You don't know anything. All you do know is that you've identified this as a zone. And the reason this is a zone is because it's been touched there and it's been touched there and it's been touched there and there. But what you need is at least one and two touches. Without those two touches, you don't have anything. If it has touched more times here, that's perfect, but you need that. And then to qualify that this is a proper area, this year is 1/3 of the way down, this year is half of the way down, and this year is the full way down. So what you need to qualify this zone is that you have two touches, and what you need is a untested area. Untested means it hasn't gone down there and taken profit. We assume that this is where they're taking profits, and it's an assumption. If it's come down here, we need again one, two, untested area, hasn't gone down by a third. So that makes that a qualified zone. Two touches plus untested, which means it hasn't gone down 1/3 of your identified area of your playing field. So you have your two touches there. You look for your normal stop hunt. So far, you only know the divergence one. Next week, I'm going to show you the other five, which means you can get 1 plus 5 equal to 6 entry methods. But you're looking at the same zone. So everything needs to be qualified. The zone needs to be qualified, and the way it gets to the zone needs to be a trend which is defined by Elliott wave, which means we just want 5 legs, motive waves. We need 5 motive waves. We don't care much about the corrective waves. As long as you can draw these 2 points there, if you have something going up here and the trend changes, then start your trend there. You've got your 2 touches. You must have 5 waves up. So this needs to be qualified, this zone, untested, and it needs to be in a good area. And then you also have another thing that keeps us out of the trade, and that is the envelope. Must be extended beyond the mean there. So it keeps us out of bad trades. Yeah. So there are now 2 things here that keeps us out. There's the area plus the way it moved up to there. If you get one candle that just smashes through that, then also we don't want to use that as a zone. We prefer continuing the trend after the pullback, looking for the thing there, and then we continue going. Does that piece make some more sense? So we need qualified levels, and we're calling a level this horizontal zones here, and we're calling a trend that is defined by Elliott wave. We need 5 waves, we need 2 touches there. Then we do some trend line analysis. We're looking at the health of this trend, and we can look at a lot of different things. One of the other things that we can look at other than momentum, the momentum is, remember, the strength of that wave. That's my first wave. Right? My second wave is longer than this one, which means there's no reason to look for weakness here. It's going strong. The next pullback, we can still say, let's go. We're going longer because of that. But if this one here, if this leg pulls and goes and it's shorter, then we can think, momentum theory, Dow says that this might be a trend weakening. Do I have 2 points? Yeah, I do. There. I draw a line. Okay, that is going to break. But do we care about this break? No, because look, we didn't get our first opportunity to trade. Yeah. The whole idea, it starts off with an idea of I'm going short when it hits this level. It starts off with that idea. So on your weekly, on your Heikenhashi, you do a top down to find out your probable direction of your next trade, to find out your playing field, the size of it. And then if it's in a good area, if you see there's a 633 or a 200 period moving average on your weekly, the line is there, and then you go to your normal chart and you see that you have a excursion beyond the mean in that same area, then this is a very good area for you to look for that first opportunity. That's your first one to go short. And then you look at trend line analysis, the health of your trend, how it has been going up there. Look for weakness. If it's getting weak, you become alert to that trend line breaking so that you can add to your position that you've already taken up there. The other methods of finding weakness is the traditional methods that we like using. Yeah, when you see a trend line that's going, this is your level. I'm never going to start this without this. This is what it is, my identified playing field. Without this, I'm it's worthless. 2 touches hasn't been tested. 1/3. So now you have your 2 touches and you're looking for that. But now your trend is going up, right? The trend is going up. It's a confirmed trend. So what happens here with your RSI? Look at your RSI also as a confirmation when the trend is becoming weaker. Because if your RSI is now pointing down, it's that high there, and it made a higher high, but the RSI not, then this is also looking at weakness in a trend. So not only are we looking at the actual legs like we do with the momentum theory, or the way it's pulling back, it pulls back to 50, but the next time it pulls back to 70, which means they are getting much stronger here, the sellers. So the next pullback, you need to watch out because of it's getting, the sellers are very strong. Then you look for that breakdown there. You see head and shoulders happens that way. So it's not only do we look at these legs, we also look at indicators. any weakness in a trend, because that is the edge that we have. Weakness in a trend happening at an area of importance. That is what we're looking for. So that we can be one of the first guys to get in. We're taking a high risk here. We're looking for the stop hunt. But look, when we say high risk, we're adding a lot of filters. It needs this. It needs the level. It needs the zone. It needs the extension beyond the mean, and it needs a stop hunt manipulation sort of a thing happening in that area. Yeah. So you need all of that before you get in on your first opportunity short. So the first step, Quinn, is the weekly, is so that you know what your zones are. You want to know your playing field. So you're looking at your weekly. And then on the weekly, you can see your 633 or your 200 EMA very close to price. Prices are coming up to the 200. And then you can see, oh, I want to go short anyway because the massive trend is down. So you do that on the weekly, and then you drop down to the daily. You look for more direction. You look for more clues to weakness in trend lines, and then you see whether this corresponds now. Your Heikenhashi stuff corresponds to your classic charts, because with that confluence, then this first trade is going to work out much better for you. You're going to have much more confidence in that first trade. And then if you see another level on top there, and it's failed here at your first one, go for the next level as well. Even the next one. But make sure that it's an untested level. Untested also, if it comes down, if prices has come down and it's taken the 1/3, and also if it reached the midpoint already on the daily, the 5 period exponential moving average. The midpoint of the envelope. That is also then, that becomes it's already tested. We want an untested level. Because if that's happened, then if this has happened, then I'll look at the next level instead. Making sure that we have stuff to the left and it's obviously already untested because prices hasn't even gone up there yet. So there's a lot of things to look at before taking your first opportunity. The first opportunity is the most highest risk, yeah? And then afterwards you get confirmation that you have a weak trend, then you look for your trend line to break. Any sort of weakness, RSI weakness. Also, what you can look for is the EMAs. When you're getting the EMAs spread apart, when you're getting EMAs maybe coming down like this, and it's coming down and it's going apart, it's more indicative of a proper trend going down. But as soon as the EMAs start moving closer, that's again weakness of the trend. And then maybe you even get an RSI sort of a situation here. Then you look for that trend line break. If we are in the proper zones and stuff. So there's a lot of different ways to look for weakness in a trend. And we're looking for weakness so that we can be the first people to get in here. We want to be the first. Then we want to add to our positions as we go up. This we're doing on H4, adding to positions. So our first, we call that a break and a pullback. Our first break pullback is our best opportunity after our first opportunity. So we're constantly adding after break pullbacks here. And then don't add if you see the trend is getting weaker. See, trend line analysis is something that is probably never done. But if you do it, it just ups your chances. And if not anything, at least it keeps you out of a bad pullback. Now I'm recording this. I would have used much worse language here. But I'm going to use this video again. So the don't add to positions if you see the trend is becoming weaker. If you see the trend is going up and you in on your first break pullback, right? And that was your first leg, and then you get a strong leg, then there is no reason not to take that pullback now because you got a strong leg. So take this pullback, it's fine. Based obviously on a stop on in that area. But that's okay. Yeah. So all these little things look at and it ups the chances of that actually breaking that portion there, and then you are happy with your stop all the way there. And remember, our first one is down here. So we are very happy. Our second trade is here. So if this starts happening, then we are thinking thousands of pips. We don't give a, we don't care about anything. We don't care about how this thing pulls back. Because the guy who's put in this high, he is sitting here and he is smiling. He doesn't give a damn if this thing comes down here. He doesn't care. Nobody's taking me out. Nobody. I don't care what happens here. I don't care. I don't care. The chances of that happening is higher. So to manage to sit down still and sit on your hands while this is happening, while prices are crashing down against you through stop hunts and stuff here, the only way to sit happy here is if you got your first position there and you're still in. And this is the reason I take 3 positions here. I take my first 100 pips there. I've got profit, I'm banking it. I don't care about my second, my stop is still underneath. I'll show you this stuff in risk management. I'm stopped here, I'm safe. I've got 100 pips. I'm still smiling. It goes up and it breaks that there. My stop is still down here now. After a stop hunt though. So no stops are ever moved until I see another stop hunt. No positions are added until I see another stop hunt. And I call a stop hunt, but if you want to call it a manipulation in the market, it doesn't matter. For me, I'm never in the market unless there was some sort of a manipulation that happened first. Yeah, that's another edge. So the edge that we have is like very strong. We never act unless we have that zone. We never act unless if this zone has been tested already, mean profit has been taken at 1/3. We don't act. We don't act if we don't find a manipulation in the area. So we have a lot of edge. Yeah, the only thing that we need to practice is this level. Is the level a decent one? Because we don't know the trend. Remember, this thing has been going up strongly. Who are we to stop it up here? We are at the mercy of the guys who stopped it back here in 2016 or whenever. We are at their mercy. Because the guys, the most recent guys here are pushing up, man. They are pushing up. They are pushing up. We're hoping that they are going to take some profits in this area. And that these guys are going to jump back in. But if they want to do it further up here, then there's nothing we can do. We just have to look for the same thing here again. Not we are wrong, what did we do? It's nothing. It doesn't matter what we did at all. This market moves irrespective of anything or anybody. It doesn't matter. If one guy decides here, he's got $100 million, yet he wants to push it all the way through there, through the barrier, doesn't care about anything, then he will do that. And who knows that there's someone sitting here wanting, willing, and able to do this? We don't know. We can never know. So therefore, you are not wrong. Just look for the next level. There's nothing wrong. It's only a probability game. That's all that the whole thing is. The probability that's going to happen here is high. And if it doesn't work here, you don't need to be despondent. You don't need to feel any sort of emotion here. There was a guy richer than us that decided to move this market um, up for whatever the reasons he had. We don't know. Just do the same thing over and over consistently, and then you will be profitable. If you start messing around here, yeah, not taking this trade because you're scared, then you're never going to be able to measure the system. And the system fails because of levels only. So once we start practicing and trading on these levels, we can even start identifying how that looks on euro dollar, how that looks on pound yen, how they normally manipulate on a certain currency pair. So weakness in the trend, that is what we are after. Weakness in the trend. Now for this part of it. When a trend, when you find an identified trend, a proper trend, Elliott Wave has said yes. Now, when you see it going up, the probability that it's going to move up and up and up is high. Yeah, we never know when the trend is going to end. The probability is there, might end there. Yeah? But the thing is that this guy who puts in the highest high here, he is the strongest of all. Yeah. So when you get your trend line maybe breaking here, remember this guy. Remember that he put in this highest high here. It's still an uptrend, even though we got this trend line to break here. It's still an uptrend because of this guy. So if you get your situations here, you can still get all these things. This is the guy that we are after. Yeah. So we are risking high on our first trade here, and we are risking high on our second trade here. Yeah. Until that guy is out, this is an uptrend. And if he's out, we need a close there. We need a pullback, and we need that to break before we are happy and confirm that we are now in a downward trend. So all of our trading that we're doing here, our first one and our second one, are high risk. We are trading against the trend all the way up until this guy is taken out. So relax when that one is taken out. But remember that they were most recently pushing prices up toward your level. So the probability of this momentum going is high. Yeah. Also, we have a high probability of it working out. But now the thing is, when it works out here and our first trade works, this is when we start adding to our accounts. This is when it starts growing. But we need to suffer this piece here first. And that's unfortunately always going to be the case. I don't know of any better way of getting into a trade other than it looking like a manipulation. And other than finding a good level. So if you find a good level, your probabilities are going to be higher. All right, do you have any questions on that? when it's not done all on the daily, it's done on the whole top-down approach. Let's go into a chart and see to try and answer that one, Andy. Okay, let's just take a random chart like this one, right? The dollar. Let us clear everything off here. Okay, so if we start on the weekly, then we notice that we are in a downward trend. And then also what we are noticing here is the legs of the trend becoming weaker. But I don't like this. It goes against my fundamental view because I don't really want to trade this long. Yeah, I want to continue this going short. So you'll have to suffer that as well. So what we have here, you put your line right on where the prices are at the moment. And then you move up or down. It's already at a very good resistance area. We have confluence. We have confluence meaning this area we have this area and that area there. Yeah. And then we have a EMA. This is our 36 EMA. And then when we look to the right, we have 1150. Yeah, we just put it on a round number for no other reason other than it seems as if order flows are sitting at these round numbers more often than not. So again, on price for my next level, where's the I pull it down to where we have some sort of a pivot area. Yeah, prices is pivoted off this area before. Looking to the left, we are not 100%, but we are okay. If we zoom out, we can see, okay, we do have some more touches there, so we are okay. Then we look at the right, and it is 110, so maybe 110 without the 13 would be okay. There, that would be nice. Then we would like to go down, we would like to trade short, and if it breaks up, we can look for an area maybe up here as some more resistance there if it does break up. And if it breaks down, we will look at that area. So 4 lines is the maximum here, so that we can just stay clean here, because we already have these EMAs that can also give us some sort of an idea of where to take profits. So now we have prices trading right at the level of importance. So there. And now look at this. We have prices that were trading here, and then also on the daily, you can then move it up. There is where prices were mostly. You see, we are zoomed in now, so we can more like magnify where this could be. So now, based on the daily chart, we have this level and this level. We're always using the midpoint of the body and the wick. You see, not up here and not down there, but in the middle, because that's a zone. Yeah. So instead of drawing the zone like we normally do, like this, you can just, to keep the chart clean, just have one line in the middle. So when we look at prices here now, we have our 2 levels here. We have touches to the left, right? And then we have our, this is our 200 period moving average. It's really touching it perfectly. And we have 1160, and usually we have order flows at 70. So there, that is the area that we would like to look at. So we have these 2 touches and prices coming up. So now, if you looked at a few days ago, prices were, maybe this is Thursday, and then Friday prices comes through, yeah, that area. Then if on the daily now you get the same sort of a situation, you have your prices going through the, you, firstly, you have a good zone. You have an area here. This is not 1/3, so this is perfect. You have your level here, excursion beyond the mean. Then that is equal to the same thing here. So this is giving you confluence that this is good, that your level that you found is good, because you have confluence of your 200 period moving average. Looking at the daily, you have your excursion beyond the mean in that same area. The line is the same, 111.70. So now you look for an entry based on, you know, only one entry so far, I'm going to assume, but Andy and Quinn, I think, knows a hell of a lot of different entries when it gets to this level here. So I'm going to let them use that same entries here, yeah. But I will help them qualify those levels in our next session with those six entry methods. But you can see no matter what you did here, you were looking to short in this area. Do you agree with me that you were looking to short in this area? Perfect. Now, when it happened here, you weren't very happy to look for the short because they don't have an excursion. We don't have anything. Yeah, unless you were trading at the bottom here, there was no excursion beyond the mean. It wasn't a good trade. But this really here you were looking at a trade going long, excursion beyond the mean in this area. Yeah, the third rule thing, it is more on your trigger, Andy. It is not on this daily. It is more on your trigger. Because you're looking at this midpoint being more or less the third sort of a thing. With these levels, you are looking at it like this. If I um, take this for example, where can I show you? Let's look at this. I'm going to show you this. Let's say this is a level here, yeah, and then we look to the left, and then prices comes down. Then on the daily we say that that is now no longer a level. So if I move it to the left here, then I'm not happy anymore because it's taken its profits there. That's what I do on the daily. I confirm. I like a new level always, meaning, let's see, this year would be a brand new level if prices gets up there. Um, yeah, this one. This is a perfect one. Can you still see the chart if it's zoomed in this closely? Yeah. So this is the level. Let's say that's a level, and we look to the left, right? And it clipped that one, perhaps. Yeah. So now prices are there. It trades right there, and then it's come down. So for me, that level is now done. Now I need to look for the next level. So I'll act again. So now it's come up here. It went through this area. For me, that level is now done. I need to look at the next highest level, which is there. Do you see that? That is what I do on the daily, qualifying a level or not. So if it's touched that midpoint, then I count it as a nullified level. I would look for now the next level. But when we do the trigger charts next week, then I will show you closely what I mean by the untested on the 15-minute on trigger chart level. But on the daily, this is what I do. The level has been untested if profits hasn't been taken. Like here, Now I go to the left. I traded this one. There's an excursion beyond the mean, but it went onto my, it touched the midpoint already. So I am not looking at this level anymore now. I'm done with that level. Do you understand that one? Perfect. Okay. So then we are looking again at this one, right? I'll zoom back in. Right, so prices has come up, and then look, it's touched it, but now look, it's already there. So for me, this level is now done. So if this price goes up here, I'm not interested anymore. I would look for the next level. That is how I trade the on the daily from the daily level. Yeah. So we have this. So now, what am I assuming here now? If it comes back up here, nah, I'm not too bothered. I don't want it anymore. So then I would look at the 4 hourly here now, and then I will see, okay, I'll do some trend line analysis. Firstly, is this a proper trend? I'm going to say yes, it is. So can I get some two touches here? I can say yes, it is. Yeah, I've taken a first position here already. Yeah, but it's already touched my midpoint. So my next idea would be, okay, if I can break this trend, and then I would consider a shorting opportunity. Yeah, based on that pullback, I'd look somewhere there for a trading opportunity. I'd look for a stop on there, the same like I looked for a stop on there. That's my first opportunity. I'm in. I made some profits. I've made 60 pips or so. I've banked those profits, and then um, I'm leaving my positions in, and I'm looking for another opportunity there. And then always wary of, I'm in there, but look at how close my 633 is. Always weary at these lines. What's going to happen? Doesn't mean I'm closing my trade here. It's just I am weary of these lines. Again, another one. If it goes through that, I'm feeling happy that we can go. You see? But when I get to these levels here, I'm definitely taking money off the table. This is why I got three positions, and I like using three. I know guys who uses only one position, which means he's taking one position. He takes 1:1, or when it gets to the midpoint, but then he's adding another position here after a stop on. And then as it gets closer and closer now to its target, the more and more concerned he is that there's no real space for him because he's so close. He is instead, he's rather waiting on to trade long here and then a trend line break sort of a situation to go back up. So the idea and the plan that you have starts off on your weekly, looking at a top down, looking at your playing field, measuring your playing field, and then deciding whether you are interested in this pair or not. So it takes a lot of work on one pair. So this is the reason I choose a few pairs to trade, because doing trend line analysis and stuff is it takes a lot of time. Look at trend line analysis here. What's given us the clue here to go long? Look at this clue. There is no doubt that this is an RSI causing a weakness in this trend. Yeah. And also the spread of the EMA is getting closer and closer. That plus if I put in RSI in here, yeah, you see, there is my point there, and it's going lower in a downtrend. So which means that I am interested in this trade somewhere here, my first position, but also I'm looking for two touches somehow here to be able to trade that break and my first break pullback, which is here. So I'll be looking now to add my position there and then adding again a position either on the 12, which is risky. And there's people that does this with great amounts of profit. Like if you look at this one, right? Here's a trade there on the 12, a trade there on the 12, and a trade there on the 12. Yeah. So in this case, the 12 failed really, if you look at that. But it failed only if if you, how much pips is that? If you didn't want, 40 pips. So for me, that would have failed. But I usually would take my trades in and around the 36. And if there's confluence, like here, you get a confluence of a trend line, two touches, one touch there. If I delete all of this stuff on here so that you can see better. Here you have midpoint, midpoint, touches, touches, touches. So it's going that way. So for me now, my opportunities were the first one were there. The second was somewhere around there because it has even confluence of the 200, and then the other trade was there. And then all the time when it does that, next time I need a higher high, obviously, because I'm doing trend trading now. I need to qualify a trend. Also, constantly watching out for weakness of trends because I'm also looking for that break going the other way. If you look at the pound versus the dollar, did it really well, did it very nicely. Trend line breaks and things happen very nicely here. Like here, we have a confirmed trend coming down. It's got some touches there. You count these here. It's not a exact science. What I do like doing is the middle of the bodies and the wicks and then coming through and making sure there's touches there. And then what you have here is a break. And I don't like it that it breaks that high up and retest that. I wouldn't take this trade, but I know people who constantly do this. And they will stop doing this if it's not working. Pull back towards 12, break towards the 12, break towards the 12, break towards the 12. So you won 1, 2, 3 trades there and you lost the last one here. Following that strategy. So every time you see a break of a qualified trend, you just do you go in the opposite direction. And this is without doing any sort of top-down analysis on one time frame here. One time frame. Here you get your break of your trend, and then you get your first pullback, and in this case, your pullback towards all those EMAs are there. So you're looking for your opportunity up here. Always bearing in mind though that your first trades were based on this sort of a thing. Yeah, it was based on that sort of a thing. First trade there, then break pullback, and then what do you do? But you can't be chopping and changing. This is why at the very end you're going to need to again send me another updated version of your trading plan, telling me that I trade breaks and waiting for pullbacks to 36, and then that's all you do. I don't want you trading on the 12 here if your plan says 36, just because the 12 is working out nicely here. Right? In this case, the 12 is also working out nicely. My specific plan is break, pullback, and preferably a trend line coming down with confluence of 36. And then I'll trade it forever going down on this fashion. Yeah, so this is all about trend lines and trying to find weakness in a trend so that you can get into your first position, your first break pullback. Bearing in mind that you've already taken a trade here. you're feeling almost comfortable because you are taking the profits that you've got from your first trade and you're putting that back in on a break pullback idea. Here, a break pullback doesn't work, but you're trading here, you've got your break, it's got a pullback, and you are trading and you're looking here, and then you get stopped out here. But if you feel that you've already taken profits on the first position, maybe, then you don't feel that bad that the break pullback doesn't work. But if the break pullback works and you're trading all the way up to the next barrier, then you need one or two of that per week, and all the losses that you've had, it gets covered. But you need to be consistent in what you are doing. I trade break pullbacks to the 36. I don't trade break pullbacks to the 12. Or I trade break pullbacks to the 12 and the 36. But then be consistent. Trade that way all the time. Yeah, that is very important. Now, the reason for all of this measuring of whether the trend is a proper trend and all that is so that we can be objective. And if we are objective, then we will be able to measure what we are doing. Otherwise, we can't measure what we're doing, and we don't know where we are wrong, where we are going um, uh, wrong, or where we can improve on our level finding, or whether we can improve on our trend line analysis, trend line health. Does that make things more clear? Before I give you the homework for today, can you just confirm that you are on the same page with me here? Andy, with regards to first position and all that, that comes in the last lesson where I show you the risk management. For now, it's all about weakness in a trend so that you can trade that next opportunity, the probability of the trend now changing. That's what we're doing in this lesson. So in the previous homework, we said that we want you to show me a trend line and that it breaks. Now I would like you to show me the trend becoming weaker in any of the methods that we showed you. Yeah, the trend is becoming weaker based on just get this whiteboard up quickly. So the trend is becoming weaker based on anything. And then you show me the trend line breaking. Yeah? So the trend is weaker because the legs are getting shorter, which is momentum. Or the trend is getting weaker because we're getting the pullbacks are becoming deeper. You see, this is like a ending diagonal based on Elliott wave. But it's weakening of a trend. So what happens after the ending diagonal here? It's usually a correction. So that's what we're talking about here. Looking for that trade there. Or we're looking for weakness in a trend because the EMAs are now no longer flaring out like this. It's becoming closer and closer. Or even that cross is nice. Or we're getting a trend line that's becoming weaker because at the end of the whole thing, we have a divergence on the RSI. So show me the same sort of homework, but this time the trends has to be measured and the trends have to have some sort of analysis before you identify the weak, before you identify the break. Right? So what I want is a daily trend line break. Yeah. And that trend is becoming weaker and weaker on the 4 hourly identified. Yeah, you understand? Okay, perfect. And then next week we're going to do um, the entry methods, and then the following week, which is the final one, is going to be the risk management. Yeah, you can, if you're finding weakness on the daily or the 4 hourly, doesn't matter. As long as we are, that the reason you are looking is because it's getting weaker, and therefore there might be a potential break. Maybe look at the same homework that you've discussed with me, and have a look at if you would have chosen a different example, because now you know how to do trend line analysis. Yeah, so trend line break based on a trend becoming weaker and weaker. You can look on the 4 hourly or on the daily. Okay, so if there aren't any further questions here, I'm going to leave it at that. Unless Mark wants to say something about how to actually, how difficult psychologically it is to stay in a trend, because that's what we're trying to do here. Let me just see, Mark. I'm just going to open up Mark's microphone. No, don't think he's there. Okay, then, guys, I will speak to you in the room again. If you have any issues with the homework, then you can just let me know. Yeah, Mark, are you there?
Yes, yeah, I'm here. Um, just having trouble with my AC right now. It's going in the background.
Okay. Do you want to add the psychology part on?
No, we're good. I think what we'll do is that we'll set up another time.
Okay,
And it's been an hour and 30 minutes already.
no.
Um, so I know the attention span is pretty short for for a human learn. So
Okay,
um,
then. Okay,
yeah,
let me know. Okay, guys, thanks very, very much for joining me. And let me know also if you're going to be interested in our daily room thing. You guys don't need to pay for it. So you're going to learn a lot there. It's going to be every single day trading and going over the charts together. Yeah, let me know if you're interested in that. We are testing it now, maybe in next week or so. Just send me a message if you're ready for that. Okay, guys, speak soon. Trade safely.